In this episode, I'm going to show you a property that made over 20% growth, and it's actually one of mine. It's in a Brisbane pocket close to the CBD, and I'm going to tell you and explain why this property did more than double the growth rate of that suburb and also more than double the growth rate of Brisbane as a whole, and how you can then apply that same strategy to other areas, not just in Brisbane, but in other capital cities around Australia. My name is Adam Panisi. I have structured training education programs on property, from buy and hold, renovation, and property development that I've done over the last 15 plus years on a couple of hundred properties. And I've got over a couple of $100 million of my own property developments in the pipeline at the moment. So let's jump right into it. Here's one of my top picks for Brisbane for 2025. And this particular area, which is the Gap, located 10 kilometers west, is actually where I'm holding 10 properties that I've basically finished development on at the start of 2025. And I'm expecting there to be substantial growth, and I'll tell you the reasons why. For starters, we've had about 1 year of growth in the Gap. The price started etching up around late 2023, so we're about a year and a bit into that price growth cycle. And over the last year, we've seen about 12% growth in the suburb as a whole, this number down the bottom, 12%. So why is it that my one property has performed way better than the general market? I'll keep telling you the story. The entire suburb has very low stock on market, so you can see there's only 14 listings according to these stats. It's got basically no building approvals, 21 building approvals. The inventory, so that is the time the current stock on market takes to sell, is less than a month. And this one here, the hold period, how often people actually sell their properties, is over 11 years. So generally the average for Australia is about 7 to 8 years. So this location, people don't sell. They buy in and they never sell, basically. So that is the supply. And then the demand side is there's only 25 days on market. That's very tight, because a market under 60 days is generally considered a tight market, and prices generally start increasing once they drop below 60 days on market. Vacancy rate, it's almost at 2%, generally above 2.5%, then it's a fairly balanced market. But the vacancy rate is below 2%, so rental prices are still increasing in the area if you're looking to invest in this area, but it's traditionally not an investment market. However, you can buy well and get a higher yield. So there's really good supply demand indicators. There's various other indicators which I'm not going to cover, but these are the main ones. And part of the reason why the suburb of the Gap is growing and will continue to grow into the future. So why is it that my one property did double the growth of the Gap? Is a couple of different factors which I'm going to jump into right now. The first part is my property is actually 10 properties that I'm building at the moment, so 9 new ones, and keeping the existing house, which you can see in the image. And the reason it's done phenomenal growth is, one, the properties are new, but secondly, the market is very tight. And thirdly, the developer sets the pricing. So I'm the developer setting the pricing on this product, and it is a very unique offering, and it's an owner-occupied offering, which is mostly targeted at downsizers, and that is the inquiry level that we've had. The reason why downsizers and owner-occupied markets are really important, and especially for this location and this property, is that they're willing to pay a bit more money to get into, one, a new property, and secondly, basically the only downsizing property in the area. And I'm going to show you the other key surrounding areas which are also pushing up prices, not just for the Gap, but also in other key locations, and it's what's called the ripple effect. So here's a quick snip of the properties on the market in the Gap, and this thing at the top, it says 1 to 25 of 348 properties, but I've just checked and there's only 2 pages of listings, so there's only 50 properties on the market. Half of those are under contract as well, so the listings are actually very low. So don't believe everything you see on realestate.com, you've actually got to check it out. So I'm sorting lowest to highest price here. So you can see at the top, the lowest price are these blocks of land. They've got no prices on them, but if you scroll down to the next price, you're at $800,000. So it's fair to say that a block of land might set you back at least $700,000 to $800,000. And if we scroll down, you've got this one here at $900,000. This townhouse here at $950,000. So you got townhouses at $950,000, houses at $1 million, starting from $1 million. So you just keep scrolling down, have a look at the sale or the listing prices. That block of land's over $1 million. Then you got an old rundown house that's $1.2 million. There's one thing, if you've noticed it, about this first page, and I've just scrolled past mine, but there's one thing that you might have noticed about this first page of listings, and maybe you might see it on the next page. So there's mine again, for sale, mine again. So there's a few of them for sale. This one, 1.4 million, another one. So there's a common trend here with these properties that are on the market. Have you picked it up yet? And I'm just going to go to basically the most expensive property down the bottom here. So we get to basically over 2 million of the nicest properties in the gap at the moment. So that's kind of, and this is the last one, and then you go to the other areas. So there's 2 pages of listings, 25 listings per page. You could see half of them were under contract, give or take. So the most expensive listing is $2.2 million for this area. So that's about where the range is. We started off at sort of 700,000-800,000, and now we're at over 2 million. These are just the current listings, not sold ones. Just keep that in mind. So that's what's on the market at the moment. Now, the one thing, if you picked it up, was there was basically, well, there's no new properties. So that one kind of looks new. This one at the end looks fairly new, but if you scroll back all through, there's no new properties on here. And the other ones, there's a couple that have been renovated. And look, this one, there you go. There's one that's a new property. $1.8 million, hasn't been built yet. That's just it's got building brokers at the top. So you got some nicer homes. So this one, like that looks nice, but it's an older house that's been renovated. This one, again, older house that's been renovated. This one, older house that's been renovated. So obviously the renovated homes are going to command more money. This one with green exterior, again, renovated and red inside. This one, older house. You got to remember we're at about 1.5-ish. Oh, there you go, 1.5 to 1.7 million. So older house. So there's no new properties in the gap. So we've established that. So let's have a look at the surrounding areas and how the gap and also the surrounding areas are getting what's called this ripple effect from developers setting pricing. So I'm going to go to the worst suburb, which is one further out. So we've got the gap here on the bottom left. So I'm going to go and have a look at property prices in Accumulator. So it's a worse suburb. So you would expect that properties are less in price. And I'm just telling you it's a worse suburb because it's further out from the city. If you've ever driven through these areas, the quality of home gets worse as you drive further out generally, and in this area that's the case. But then if you have a look closer into the city, so you've got Ashgrove, much more premium suburb. So we're going to have a look at just Accumulator to start with. Expect that property prices are going to be less, and then I'm going to show you what Ashgrove has to offer and the price difference between the two. So I'm in Accumulator looking at property prices, and I've just listed prices highest to lowest on realestate.com to see what available stock there is. And you can see at the top, there's this estate called The Quarry. It's by Fraser's Property Group. Again, new properties. And you can see the most expensive one here on a 386 square meter block. So keep in mind, Accumulator is a worse suburb to the gap. They're from 2.5 million. So the house looks pretty spectacular. I'm not going to jump in and have a look at it. The next one down, again, very small block of land, 305 square meters is $1.8 million. And block of land, 1.6 million. Another block of land, 1.2, 985,000. So let's just scroll down and have a look. But one key thing, or one key takeaway from this listing is that you're in a worse suburb, but prices are more expensive. So there's a little telltale sign in that, and the prices are being set by a developer, namely Fraser's, quite a substantial developer around Australia, internationally owned. So let's just scroll down and have a look at the other properties. This one's under offer, no price listing, but it's probably going to be under offer for the same price, around $2 million. And then we drop back down to 1.3 million. So that's a pretty big lift in values between the most expensive and then the next one down. So you got an average 5-bedroom house, again, not new, quite dated, 1.3 million. It's on a 700 square meter block. So that's important that the block sizes are quite large. So maybe people are going out here to get larger block sizes. And that's generally what people think. If they go further out from the city, they're going to get a larger block. They might have to commute further to get into the city. This one, again, older style house, around the same money. So around 1.3. This one, no price named on there. And we can have a look at past sales, but this is live right now, what's on the market. None of these have prices on them. There you go. We're at 1 million now for basically a knockdown. So that is the worst suburb, and the key takeaway is that most expensive property, all those new properties, and they're the only ones in the area that are new. Now we can sort from and I'm going to do this. We can sort from price lowest to highest. Okay, so now we're going to sort from lowest to highest in Compara. So there's no price on this, but it's under offer. And we've got lowest being probably 780,000. That's just for a block of land. By the time you build a house on that, minimum house cost will be 400,000 to 500,000. So you're looking at a 1.3, $1.4 million house at least on a 390 square meter block of land. That's a brand new house. Seems pretty good buying when you compare that a secondhand house that needs a lot of work is around $1 million. There you go, there's the next one. So this is, keep in mind, this is the cheapest on the market. There's no prices on here, but we're starting to get to $1 million. So your value proposition is you buy an old rundown house like this one, which is basically a knockdown anyway, in an older area for $1 million, or you can buy a brand new block of land, or get a block of land, build a house. It's going to be $800,000 plus the cost of the build, maybe another 500. So you're going to be all in for say 1.3 on this new build. Not that I'm promoting this development, but I think the buying proposition is actually quite good. But now let's relate it back to the gap, and I'm going to jump in and show you Ashgrove and how this area of Compara and why the developer setting the pricing is actually creating this ripple effect, and it's going to lift prices in all the surrounding areas, not just the gap, not just in Ashgrove, but other areas surrounding Compara as well. So now we're going to jump to the more premium suburb, which is closer into the city, and it is Ashgrove. So you can see right from the top, you got a spectacular house at the top. Now you might be wondering what price this is listing at. And the top one, or the second top one, is at 4.65 million. So remember, the Gap and Compara both had properties just over that $2 million that was listed. And if you go and have a look at sales data, that's sort of the peak of those markets. Especially for the Gap will be 2.5, maybe pushing $3 million in terms of ceiling price. Compara, before that new estate came into town, the ceiling was like 1.5 million for a new property. So now we're closer into the city, you can see that there's a massive price jump up. And the Ashgrove, just in general terms, if you're not familiar with Brisbane, it is a more premium suburb, and I'm definitely not discounting that, and I think it will always be a more premium suburb than the Gap, and definitely more premium than Compara. But you can see that there's a massive jump in pricing. This one's 4 million. Again, it's something that I want to point out. This property at the top, it's quite new. It's obviously massive. It's basically 5 million. This one, 4 million, new, or very close to being new if it's not, but it looks brand new. So people are buying properties that are new. This one is a renovated secondhand house. Kitchen's not that great. This one, $3 million. Look at the size of the block. It's only 400 square meters, 3 level, fairly new, but that's over 3 million. So you get the gist. There's some expensive properties in the more premium suburb, and not just expensive by a little bit, but expensive by a lot. So that pricing difference between Ashgrove and the Gap and Compara to an extent as well is huge. So let's have a look at Ashgrove's stats and Compara's statistics, supply, demand, and see where these markets are going. Just because they've got more premium properties, that doesn't mean that these markets are going to keep growing in value, and it also doesn't mean that it's going to keep pushing prices of the Gap properties. So we look at the supply and demand equation for Ashgrove, and obviously other stats, but we're just checking this out at the moment. There's virtually no stock on market, as we've seen. There's no inventory, so things are going to be sold out in the next month. There's a few building approvals, but not many. 21 building approvals in a market this size is quite small. Hold period definitely isn't as long as the other areas that we've seen. So nearly 9 years, that's still a long time for people to hold property in an area that's above the Australian average, but it's not as long as the Gap or Compara. So those markets people buy into and sell out a lot longer. The days on market is actually a little bit higher, and maybe that's just reflective of people's unwillingness to sell, which doesn't surprise me. If you don't need the money straight away, you're going to sit around and wait for a higher price. The vacancy rate is nearing 2%, so it's still a tight rental market. And you just check the days on market down below. So the yellow is the days on market. So the last little bit, days on market has increased slightly, but that isn't a telltale sign that we're in a declining market. And we're just looking at really the price difference between the suburbs, and also whether or not this suburb is going to experience a crash anytime soon and values are going to decline, which is going to have the opposite effect in terms of the pricing ripple effect to the surrounding locations. To better explain the pricing difference between better and worse suburbs, let's have a look at the heat map of median prices. And you can see the gap median prices at $1.28 million. The better suburb Ashgrove's median is at 1.7 million, but we've seen that big jump and that big range in price values, especially with new homes in Ashgrove. So this is closer to the city, and you can see as you get closer to the city, all of these areas that I'm circling at the moment, Ashgrove, Paddington, Barton, Kelvin Grove, Red Hill, they're all basically in red, so that means prices are substantially higher. Then we go to the gap. Now have a look at the gap versus Capera that we were just looking at. So Capera at the moment, their median is only 950. So if I was a betting man, I would say that Capera has a lot of room to move, and it's going to experience significant capital growth as well. And that's heavily driven by Frasers and that new property development, which is demanding premium prices. And the amenity in Capera is actually not that much worse than living in the Gap. It is a little bit longer to commute to the city. You got more traffic, of course, you're further out. But in terms of pricing, you got a very cheap suburb wedged in between much more expensive suburbs. Look left, right, up and down, all the surrounding suburbs around Capera are more expensive. Enoggera, $1.25 million median. Upper Kedron, $1.2 million. It's further out. Ferny Grove, just over $1 million. So the Gap, it's closer to the city. It's sitting right next door to a much more expensive area, which is Ashgrove. And if you have a look at Capera, what's up and coming, you can buy a new property for $2.5 million. And I haven't looked at Upper Kedron, and I don't want to do that exercise to save time. But if you have a look in Upper Kedron, they've got new stock coming to the market as well, which is priced very similar to Capera. So you've got these two suburbs that are further out, they're worse suburbs, and they're basically getting the same prices as a suburb, which is the Gap, closer in to the city. More amenity, much more prestigious. So there's a bit of a telltale sign with that, and why I believe that the Gap is going to experience significant capital growth over the next 12 months. And it's because it's driven by property developers setting prices in heavily undersupplied markets, rising building prices, limited land availability, and people wanting to get new properties. And also, if you've got a completed property, which mine are, so I'm developing properties, not everyone wants to do the build, not everyone wants to take on that risk of building, especially now. So if you're an older demographic, especially downsize the market, and you want to jump into a property, you don't want to muck around with the build, you just want to pay a bit more for it and know that you can move in straight away. You can touch, see, and feel the finishes. You know what the end product is that you're going to get. So people are willing to pay a premium for that, providing that they have the money to do so. So what I've just shown you with this pricing disparity between suburbs, the ripple effect on one area, pricing affecting the surrounding neighbors, this is all real. I've experienced it over the last 15 plus years being in the property market, transacting hundreds of properties. And the reason why I held off selling the project that I've got, the one I'm building at the moment, I've held off a lot of the sales until the end because I could see this wave coming. I could see where the market is. I'm noticing that our inquiries from a downsizer market, which was the target in the first place before I even did the build. So now what I'm expecting in 2025 is really no different to what's transpired over the previous year. And in actual fact, it's probably going to be a lot worse because there are low stock volumes still. There's still builders going broke, less people building, less land available. You're closer to the city, so you don't just have 1,000 lots being released next week or next year. That just does not exist. We physically don't have the land available if you want a house with a land component. So what is going to happen around Brisbane, and not just in this area that I'm specifically mentioning, although it is one of the better areas I believe that's going to have substantial capital growth in 2025, what I'm highlighting is that this same existence happens in various locations around different places in Australia, different capital cities, irrespective of what the rest of the market is doing. The market could be running zero, so it could have no capital growth if you're looking at, say, Sydney or Melbourne the last year. But if you know where to look for these particular nuances, new properties coming to market, setting a premium, it lifts all of the surrounding property values, providing that people still can afford to buy those properties, and also providing that the developer or that new stock isn't oversupplying the market and then buyers end up bidding the price down. So there are some variables to that, and obviously there's more that I'm not going to go through in this video. But if you want to know the full analysis, I actually run a program or I talk about at length what's called Suburbs in Transition, which is exactly what these suburbs are, and how to pick the suburbs in transition and jump in and double that capital growth or more to what the rest of the market is experiencing. Any other areas you want me to analyze, leave them in the comments below.